Hey everyone, welcome back to Corporate Decoder. Today UNCY just filed an amendment to boost their at-the-market offering, and I am seeing a key decision that signals their strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is taking steps to access more cash, and the amount they are aiming for tells a story about their plans. We are looking at an 8K filing from Unicycive Therapeutics Incorporated. This type of report is used to announce major events that shareholders should know about. Think of it as a company's way of giving you a heads up on important news. The main event here is about how Unicycive Therapeutics Incorporated is planning to raise money. They have an existing agreement in place to sell their stock, called an at-the-market or ATM offering. This means they can sell shares whenever they want directly into the stock market. What is new is that they've signed an amendment to this agreement. This amendment essentially ups the total amount of money they can raise through this ATM offering. Originally, they had planned to sell up to $100 million worth of stock. Now, with this new amendment, they are increasing that total to $150 million. This is a significant increase to their fundraising capacity. To make this happen, they also filed a registration statement on Form S-3. This is a document that basically tells the Securities and Exchange Commission, or SEC, that they are authorized to sell more shares. They specifically mentioned filing for an aggregate offering price of $50 million. Which makes sense because the total offering capacity increased by 50 million from 100 million to 150 million. So what does this tell us? Unicycive Therapeutics Incorporated is positioning itself to access more capital. The fact that they are increasing the size of their ATM offering suggests they anticipate needing or wanting more funds for their operations, research, or whatever their business strategy entails. It could mean they are pushing forward with a new drug development, expanding their clinical trials, or perhaps preparing for future business initiatives. The company is currently listed as an emerging growth company, which usually means they have fewer than $1 billion in annual gross revenue and are thus allowed more flexibility in reporting. For investors, this means Unicycive Therapeutics Incorporated is planning to sell more shares of their common stock, which trades under the ticker symbol UNCY on the Nasdaq Capital Market. When a company sells more shares, it can lead to dilution. Dilution happens when the total number of shares increases. And if your ownership percentage stays the same, your slice of the pie gets smaller. This is something shareholders always need to be mindful of. The actual details of this amendment are laid out in Exhibit 1.1 of the filing. It is the document that formally amends their sales agreement with Guggenheim Securities, LLC, who is acting as the sales agent. The filing is signed by Shalav Gupta, who is the Chief Executive Officer. This shows the decision to increase the offering has been made at the highest level of the company. Looking at the broader context, Unicycive Therapeutics Incorporated operates in the healthcare and biotechnology sector. Companies in this space often require substantial funding for research and development, clinical trials, and bringing new treatments to market. The news from Stock Titan on the 5th of June, which mentioned them boosting their ATM capacity and filing an S-3 shelf for $50 million, aligns perfectly with this filing. The Globe and Mail also reported on this expansion, indicating it is a notable event for the company. It is interesting because other headlines from May show a shift from profit to loss and an expansion of their equity pool. This new filing continues that trend of accessing equity to fund operations. It suggests that Unicycive Therapeutics Incorporated might not be generating enough revenue from its current operations to cover its expenses, a common situation for many biotech companies in their growth phase. They are essentially betting on future success to justify the current cost of capital. Top institutional holders like Vivo Capital LLC and Millennium Management LLC hold significant stakes, and how they react to further dilution will be key. For companies like this, raising capital through ATM offerings is a way to stay agile and fund their pipeline without needing to time the market for large equity raises. The risk, of course, is that prolonged periods of dilution can put pressure on the stock price, especially if the company doesn't show clear progress towards profitability or commercial success. What Unicycive Therapeutics Incorporated is doing here is playing a common game in the biotech world. They are raising their hand and saying they need more runway, more cash to keep their development engine running. The big question for investors will be whether this increased capital will be effectively deployed to generate significant returns and move the company closer to product commercialization or profitability. They are essentially buying time and opportunity with this move. The risk I am watching is the pace of their cash burn versus the progress in their drug development pipeline. My biggest concern is whether this capital injection will be enough to reach key milestones or if they will need to come back for more funding in the near future. What I'm actually looking for is a clear update on their clinical trial progress that justifies this increased need for capital. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, please give it a like, subscribe for more, and join our Discord community linked below.